So let's begin with James Gerrish, Portfolio Manager at Shaw and Partners and Lead Portfolio Manager with Market Matters. James, welcome.
Thanks, Andrew. Great to be here.
So talk about some of those valuations being stretched. You've actually come up with a US stock. Are you seeing perhaps better value in the US than you are locally at this point?
I think if you think about what's made the market, rich from a historical standpoint, is a small number of stocks that are big index weights that have been really strong over the past 12 months or so. So we're still seeing pockets of value in Australia as well as overseas. I mean, obviously the US market has got a greater depth of companies, greater breadth of companies. So it does make it a little easier to find names over there. But I'm not here saying that we should all be investing looking at the US. We also obviously look at the ASX, and it's just about being open-minded and finding the best value, whatever exchange that it's listed on.
All right. So you've come up with a consumer cyclical stock. Why is that?
Yeah, firstly, it's an interesting company. It's got a great brand that's starting to grow in Australia. I'm into the outdoors, I'm into boating, and if you're similar to me, you've probably heard of this name before. You'll now see it in Rebel Sport. You'll see it on the jersey of the North Queensland Cowboys. So it's starting to get a bigger footprint here in Australia. I'm talking about the brand Yeti, the stock Yeti. So they make outdoor coolers, eskies as we call them here, drinkware, etc. So this is quite a large business. It's $3.5 billion market cap over in the US. And I think it's undervalued here, and it's got a really strong growth runway over the next 12, 24 months and longer. So
you say it's undervalued. In fact, we might bring up the share price if we can. Well, it took a bit of a tumble in 2022. Why was that, and why are you seeing that value now?
So if I cast our minds back to when it listed in 2018, it listed at $18 a share. It ran up to $108 a share. It was a really strong beneficiary of COVID. We all bought coolers, and we were all holidaying at home and buying all those sorts of things that underpinned holidays internally rather than travelling abroad. Fast forward to 2022, it was also what I call a supply chain casualty. So, when supply chains struggled in 2022, Yeti struggled to get product, and they fell all the way back down to circa $30, $35 a share. So this has been a company that's had a pretty volatile history, yet the business has been improving. So if I think about it now, it's trading 14 times earnings. It's been in its short-listed life, it's been as high as sort of 35, 40 times, and has been as low as sort of 12 times earnings. So in the past 12 months, and we've owned this since 2023, so if I think about our international equities portfolio that we made available to Market Matters members in 2019, it's done about 20% per annum since it's been published. And we've had some phenomenal winners in there: Microsoft, The Trade Desk, Blackstone, Zillow, a bunch of others. Yeti hasn't been one of those. So this has been an underperformer in the portfolio. We bought it in 2023 about $39. It's about $40 at the moment. So it really hasn't done anything for our performance. But I think from a business point of view, the business has actually gotten better, particularly over the last 12 months, yet the share price is not reflecting that.
Does it face some significant headwinds in the looming prospect of tariffs? We've heard what Donald Trump has had to say. There are already tariffs in place in various regards there, but given what he has planned, difficult to know, of course, whether he's going to follow through, but what are the potential risks there?
So you think about a stock that's undervalued. It needs to be undervalued for a reason, and markets are forward-looking. So tariffs we're not hearing about tariffs for the first time now. We've heard about tariffs during the run-up to the election. Right now, Yeti produces the majority of the production of Yeti products are primarily in China. So that's a risk, and they would be impacted by tariffs. The company has been aware of that, and they are diversifying the producers they use, or the manufacturers they use for their products. They've said by the end of 2025, about 50% of their product will be produced outside of China, so they are addressing it. The issue is the important thing also in terms of tariffs to recognise is that it's not you don't just necessarily see a tariff and see a negative impact to a company or the way things are produced, etc. So there's some swings and roundabouts in terms of what tariffs actually will mean. So I think there's, from a stock perspective, I think it's been sold on the back of this concern around tariffs, which ultimately I think has, priced this stock really attractively for the growth that it's going to deliver in outer years. So, they sell about $1.8 billion worth of product. They'll do that in 24. That's about 10% growth on 23. And then we're expecting it to continue at around a 10% clip in the outer years. So you can buy something that's on 14 times, which is sort of 10 PE points cheaper than the market. It's about obviously the history of Yeti's been a little bit volatile, but if you think about valuations where it's traded in the past, it's sort of 30-35% cheap relative to its own history, and growing quite strongly. So I think it's in a really interesting spot right now. And the other important thing I'd make, Andrew, just before we move on, is just around the diversification of their earnings base. So it's primarily been a US earner, so the bulk of its sales in the US, but it is expanding, as I alluded to earlier, Australia, Canada, Europe, and then they're going to grow in Asia in 25 and beyond. So I think there's some interesting growth drivers for this business going forward.
Yeah, I was going to ask you about that regional footprint. So Asia now is their next focus, is it, for the real growth that they're likely to see there?
Yeah, so really ramping up in, so if I think about the international business, so think about Canada, Europe and Australia for now. That's growing at about 30% year-on-year clip in terms of sales growth, which is really, really strong. And then Asia is going to come online from 25 and beyond. So that's probably the next kicker in terms of growth. These are high-end products, so high-end coolers. So they operate on really strong margins, gross margins are around 60%, but they're not cheap. So this has probably also been a reason why the market hasn't really latched onto them. So we've seen a lot of these, I guess, luxury type brands really struggle in the last 12 months or so. But if policy eases, if economic growth picks up, as we're anticipating under a Trump presidency, then that's going to be a positive. Putting tariffs to one side, that's going to be a positive for products like Yeti.
Is that growth likely to be largely organic, or are you seeing any potential for acquisitions along
Largely
the way?
Organic growth. So they've got a great runway organically. So they've only, they've been operating in the US for a long time, and they've built a really robust business over there. The growth internationally is going to be, I guess, underpin the next level. But also, what you see is I think one of the keys to Yeti going forward is around partnerships. So partnerships in terms of branding of their products. So from boat manufacturers using their products into putting them in boats, etc. From sporting teams branding their products. So there's a huge runway in terms of leveraging off other distribution networks because their products are simply fantastic. So from a product point of view, they've got fantastic products that the market loves. The love of this brand is pretty significant. So you leverage that love into other distribution channels, which Yeti are doing, and that to me is going to help to support this growth over the coming years.
So are they expanding their product range? Because I look at some of the things that they produce and sell from, let's talk about tumblers, mugs, straw mugs, cups, dog beds, dog bowls. I mean, there's a big scope that they have there in terms of their product line.
So what you do, I guess it's all about, I guess it's like anything in business. So you develop a brand that stands for things. So Yeti stands for quality. It stands for delivering what you're after as a customer. That's going to be expanded into other areas. So whether you made mention of coolers and tumblers and drinkware as their key areas at the moment, but they are expanding that brand or leveraging that brand into other things. So that will drive growth going forward. And I guess the other thing I'd highlight is around the distribution of their products. So they distribute through third-party retailers, but they've also got a really strong distribution network themselves. So buying direct from Yeti. So that helps with margins, helps with the dynamics of the underlying business as well.
All right. James, let's just actually bring up that share price again. What do you see as the catalyst where it's actually going to turn up again?
So I sit here and think about catalysts all the time for share prices. So when I think about us buying this stock in 2023, it's been void of a catalyst since then. So one of them, there's a couple that I'd highlight for viewers. So $100 million buyback in place, so that's going to ramp up. So that's sort of, to me, that underpins the downside a little bit. In terms of when you're, when you continue to grow earnings, a market can only, so if you continue to improve your business, then obviously the stock price gets cheaper. So valuation is sort of the main catalyst for mine at this stage. We often see this concern around looming tariffs and the market getting fixated on what ifs. And when you see that actually come into play, that actually can be the certainty that delivers can actually be a positive. So to me, clarity around Trump coming into play and then moving towards diversification of their production base. So all of those things are going to combine to, in my view, push Yeti higher. And it's been, you can see on the chart there, it's been a little bit of a struggle in terms of share price. A few false dawns in the last 12, 18 months. But if they continue to improve their business, the share price will ultimately follow, Andrew.